From CNN London, this is World Business Today.
Good evening. Oil markets today held firm in the face of threatened military action in the Gulf, and stocks and bonds actually rallied. And now it appears traders who were steady on the trigger were right. Iraqi officials now say their troops are pulling back. Oil markets started the day shaky, prices rising more than 30 cents early in London, but in late trading, oil was slightly lower. Crude in New York also steady, opening higher and pulling back through the day. In the currency markets, the focus was also on Kuwait. The dollar rose early in a traditional flight to safety and finished lower against most major currencies. Stocks set their own course, starting strong and building on early gains. The Frankfurt Bourse surged more than 3%. Paris shares rose more than 2%, as did stocks in Zurich. And the Financial Times 100 index in London rose 1%. Oil traders today focused on the fundamentals. They say Saudi Arabia can meet any supply problems caused by disruptions in the Gulf. Todd Benjamin has that story.
Oil traders in London keeping a close watch on developments on the Kuwaiti border, but not overreacting. Obviously confident that Saddam Hussein's military forces would be no match for the U.S. and its allies.
The bottom line is that people have already seen the capability of Allied forces, and they don't really feel that there's a definite threat to Kuwait from Saddam Hussein's, 80,000 troops or so, compared to the much better technology which is already in place after the 1990 attack.
In late London trading, Brent crude was actually down 5 cents from Friday's close at $16.88 a barrel, on claims by Iraqi officials that Saddam's troops were withdrawing from the Basra area of southern Iraq. Even at its highest level Monday, oil only reached $17.25 a barrel, a far cry from the nearly $41 a barrel that oil briefly touched after Saddam Hussein invaded Kuwait in August of 1990. Even assuming a worst-case situation and Iraq hit Kuwaiti oil facilities, the market figures that Saudi Arabia, now producing 8 million barrels a day, could make up the shortfall, just like it did when Iraqi troops set fire to Kuwaiti oil wells in February of 1991. The supply-demand situation is also playing a role in the market's muted reaction.
The market is well supplied. Product stocks are not in short supply, and you can see this by refining margins. Refining margins at the moment are very low, which indicates that the market cannot really take crude prices much above current levels.
For instance, in the U.S. alone, it's estimated that home heating oil stocks are already running 10% above last year's supplies. One reason that oil prices are as firm as they are now is because Iraq is out of the OPEC mix. In the past, it had been capable of producing more than 3 million barrels a day. Its recent actions certainly haven't helped its case in getting sanctions lifted, and OPEC clearly is in no hurry to see that happen. Todd Benjamin, CNN Business News.